You've been sold a system update that is secretly bricking your hardware. The entire concept of retirement at 65 is a societal glitch, a psychological firewall designed to keep you processing data for someone else's mainframe until your battery is too degraded to actually enjoy the power you've generated. You are trading your most finite, non-renewable resource, your time, for fiat currency, hoping you'll have enough left over when you're old, tired, and obsolete. We need to delete the word retirement from your vocabulary right now. Replace it with time autonomy. Time autonomy is the exact tipping point where your automated systems generate enough bandwidth to outpace your burn rate. From that second forward, you have total geographical and temporal freedom. You want to disappear to a cabin in the Swiss Alps? Done. You want to build an AI startup that disrupts a legacy industry? Done. The choice belongs to you, not an employer. Today, I am giving you the exact, unredacted blueprint I used to hack my way to time autonomy in my late 20s, starting with an account balance of absolutely zero. I don't believe in half measures, and I don't believe in relying on motivation. We are going to restructure your environment, patch your financial vulnerabilities, and build a system that wins by default. Before you write a single line of code for your future, you need to know your autonomy target. If you don't have a precise mathematical figure, you are essentially launching a rocket with no coordinates. You will burn all your fuel and crash into the ocean. Society operates in three distinct modes: the defaults, the dreamers, and the developers. The defaults live on autopilot. They are paycheck-to-paycheck passengers who view wealth building as a patch they'll download someday. The dreamers stare at the destination. They want the aesthetic of wealth, but they refuse to write the actual code to get there. The developers build the architecture. They don't rely on hope, they rely on math. To become a developer, you need the rule of 25. Let's assume your ideal autonomous lifestyle requires $60,000 a year to sustain without a 9-to-5. Multiply $60,000 by 25. That gives you $1,500,000. That is your autonomy target. Based on the 4% safe withdrawal rate, a portfolio of $5 million allows you to pull out $60,000 every single year, indefinitely, without ever depleting the principal. Sound impossible in a 7-year time frame? It's not, but it requires a brutal mindset shift. You must prioritize network value, wealth, over temporary bandwidth. Cash flow. Cash flow is a trap if you use it to inflate your lifestyle. If you upgrade your apartment, buy a financed car, and buy designer clothes every time your income increases, you are just running more background apps that drain your battery faster. When I was building my foundation, every spike in revenue was immediately routed into assets that multiplied, not liabilities that decayed. You cannot run high-level, complex software on a machine infested with malware. Most people fail because they try to build wealth on top of a collapsing foundation. Earning 6 figures doesn't matter if your system leaks cash at every turn. In fact, a massive percentage of 6-figure earners are essentially living paycheck to paycheck. They just have more expensive quicksand. Here are the 4 mandatory patches you must install to secure your foundation. 1. Quarantine the malware. High-interest debt. Not all debt is created equal. Good debt is a tactical lever, like a low-interest mortgage on a cash-flowing rental property or a 0% finance deal on the workstation you use to scale your agency. Bad debt is a virus. Credit card debt at 25% APR because you wanted a luxury vacation or an impulsive wardrobe update is a critical system failure. You must execute a debt avalanche. Pay minimums on everything and aggressively terminate the debt with the highest interest rate first. Until this malware is gone, it will eat your compounding returns alive. 2. The UPS Backup Emergency Fund. An uninterruptible power supply ensures your system doesn't crash when the grid goes down. If you start investing without an emergency fund, the first unexpected medical bill or car breakdown will force you to liquidate your investments at a loss. Keep 3 to 6 months of baseline operating costs entirely liquid. 3. Your financial API, credit score. Your credit score is the trust metric the world uses to decide if you get access to top-tier financial leverage. Don't wait until you need a mortgage to care about it. Gamify it early. Get a basic credit card, automate a single recurring subscription, like your internet bill, to it, and set it to auto-pay the full balance every month. You pay zero interest and build an elite track record. 4. Firewalling taxes. Every dollar you earn is targeted by the biggest recurring fee in the game: taxes. You must legally firewall your assets. Utilize tax-advantaged wrappers like a 401k or Roth IRA in the US or a SIPP and ISA in the UK. One shields your money before tax, the other shields the massive compounding growth from ever being taxed in the future. Max these out aggressively. Imagine your financial life as a cloud server. If your 9-to-5 job is your only power grid, one corporate layoff takes your entire system offline. You have a single point of failure. Now imagine a decentralized network. You have your main job, but you also have 3 automated side businesses and a dividend portfolio. A market crash, an AI disruption, or a petty boss can knock out one node, but your life continues completely uninterrupted. The traditional secure job is an illusion. The modern economy guarantees extreme volatility. The fastest way to decentralize is to audit your existing skills and pivot them into high-leverage side hustles. Do not learn something from scratch unless you have to. If you are a mid-level data analyst, don't start a dropshipping store. Start a B2B consulting gig optimizing spreadsheets for local businesses. If you are in HR, sell resume rewriting systems. As a notoriously ruthless venture capitalist once told me over a ridiculously overpriced matcha latte in Silicon Valley, if you aren't decoupling your perceived value from your hourly rate, you will always be poor. Society pays you exactly in proportion to the magnitude of the problem you solve. If your output is generic, your income will be generic. Push the boundaries, productize your specialized knowledge, and funnel every cent of that decentralized profit into the final phase. Once your active income streams are decentralized, you must transition from writing code to letting the code run itself. This is where you stop trading hours for dollars and let your capital start breeding. The broad algorithms, index funds. The stock market is no longer gate-kept by Wall Street brokers. It lives in your pocket. Focus on low-cost, broad market index funds. You are essentially buying a microscopic piece of the world's most powerful corporate machines. Turn on automatic dividend reinvestment. Let the system loop. The beta tech, cryptocurrency. I treat this as the high-risk, high-reward sector of my portfolio. Limit exposure to a strict 5%. Stick to the foundational protocols that have survived multiple bear markets, like Bitcoin and Ethereum. Do not gamble your core capital on speculative junk coins, hoping for a lottery win. We are building a fortress, not a casino. Owning the server racks. Real estate. This is the ultimate exploit in the wealth-building matrix. When you acquire a rental property, you are using the bank's money to buy a physical asset, and you are using a tenant's income to pay off that debt, while the asset itself appreciates in value over time. It is the holy grail of leverage. But respect the physics of leverage. Over-leveraging without proper cash reserves can lead to catastrophic liquidations. I will not lie to you. Executing this sequence requires a brutal disruption of your current habits. If it were easy, everyone would be walking around with total time autonomy. You are going to face friction, burnout, and setbacks. But you have to ask yourself, is the temporary pain of building this architecture worse than the permanent pain of sitting in traffic at 6 a.m. for the next 40 years, building someone else's empire? Right now, your brain is looking for a hit of dopamine. It wants you to feel productive just by watching this video, and then it wants you to go back to scrolling. That is the psychological loop keeping you exactly where you are. Break the loop. Your immediate roadmap starts today. Calculate your exact autonomy target using the rule of 25. Write it down. Then, look at your bank statements and identify the single highest interest debt draining your system. Set an automated payment to attack it tomorrow morning. If this disrupted your programming, hit the like button so the algorithm knows you're ready to upgrade your financial OS. Subscribe to the channel if you are serious about securing your time autonomy. Do not just close this tab. Take action. I'll see you in the next module.